The Asian markets stumbled sharply as escalating conflict in West Asia triggered fears of a prolonged energy shock and higher inflation. South Korea's benchmark index plunged 8%, taking its two-day losses beyond 11%. And this comes as foreign and fast money investors exited positions in memory chip makers that had valued on AI-driven profits. The Korean won slid to a 17-year low amid this sell-off. Japan's Nikkei dropped 2.5%, extending losses for a third straight session. While both Japan and South Korea are heavily dependent on energy imports, making them particularly vulnerable to rising oil prices. The broader concern is that sustained disruptions in Gulf energy infrastructure could keep oil elevated and delay global rate cuts. Energy markets remain at the center of investor anxiety. Brent crude climbed as much as 14% since Friday, touching its highest level since July 2024 and trading above $82 per barrel. European natural gas prices have surged nearly 70% in just 2 days, while crude eased slightly after assurances of U.S. naval escorts in the Strait of Hormuz. Volatility remains elevated. On Wall Street, the S&P 500 closed 0.8% lower as investors weighed whether higher energy prices could feed into broader inflation. Now, the key in question now is whether elevated oil costs become persistent enough to push central banks to delay interest rate cuts. Currency markets are reflecting the shift in risk sentiment, and the U.S. dollar index rose to a 3-month high, while the euro slipped amid expectations that Europe will be disproportionately hit by higher energy costs. The British pound also weakened. Gold, which had rallied during the initial escalation, fell 4.5% overnight as traders booked profits to cover losses elsewhere. Meanwhile, Bitcoin hovered near $68,500 in volatile trade. Markets are now recalibrating for a potential negative supply shock from energy.